How's it going, everybody? Zach Boyd, student of physical therapy, friend of Rush SPT, coming at you today to talk about how to pay for grad school, and specifically with financial aid. So this is how most people pay for grad school these days, either using loans or sometimes they have to use their parents' funds or their grandparents' funds. So I'm just going to come right out at the gate, and my biggest surprise for going into grad school was the fact that grad students are not allowed to receive Pell Grants. So this is kind of huge because for me, anyways, because that was a large chunk of money that I was expecting to get and didn't get when I got into my first year of grad school in PT school. So some of these, so you really have to end up taking out student loans unless you have funds some other way. And the first type of loans I'd like to talk about are the unsubsidized loans and subsidized loans. So some of you might not know what this means. Basically, subsidized means that the government is going to be picking up the interest payments while you're in school, and these are only available to undergraduate students and undergraduate studies. So what that means, again, is essentially what money you take out for student loans while you're in school is how much you actually have in debt when you get out of school, which isn't too bad. It's not great to have a ton of debt, but that's a little bit better than accruing the interest while you're in school. So that's the bad news is in graduate school, you're going to have to take out unsubsidized loans, which means the government is not covering those interest payments and they're going to accrue while you're in school. So by the time you get out, your student loan balance is actually going to be higher than the amount you take out. So really make sure you know exactly how much you need to take out. Don't take out just the max, just to make sure you have some spending money. That's going to end up being a lot of money in the long run. Currently, the interest rate for unsubsidized loans is 5.84%, and for what's known as plus loans, which is a second loan we're about to talk about, is 6.84%. And for me this last year, it was up in, I believe, the 8% range, which is really way too high, and that's a whole nother conversation for another day. But if you're worried about the payments that you need to make going from undergrad to graduate school, don't worry too much because there is a 6-month grace period with the finish of each study, each field of study, where you don't have to make any payments, and if something's happening, you can make arrangements with the company that owns your loan. So, for example, if you graduate in May and you don't start PT school until August, you are going to be okay. You don't have to make any payments or worry about it. Your institution should send all that information to the company that owns your loan. And also, when you get out of PT school, that grace period is still there. So you still have about 6 months before you need to make any payments or payment arrangements. So now we're going to talk about the plus loans. Plus loans are specific to graduate students as well. But basically what they end up being is how to pay for your housing. Because your unsubsidized is usually going to cover your cost of tuition and your fees and maybe some extra money to spend, but it's not always going to be able to pay for your housing. So that's what the plus loans are there for. I believe there is a maximum for some of these plus loans, but I haven't been able to find it. I've heard it was upwards of $160,000 for med school, but generally with the government, you can always get a waiver for something. Most of the PT schools are not going to be that expensive. There are some out there. So I wouldn't worry about a limit on the student loans too much right now. So the other thing with student loans I want to talk about is deferment and payment plans. Basically, there are different payment plans that you can choose from with the company that you have to make these payments to, and you can defer some of these payments maybe a few years, up to 10 years, I believe. And basically what that does is give you a little bit extra spending money while you're getting on your feet fresh out of college. But there's also other plans where you can start paying right away, which is what I would recommend because that will keep you from accruing a lot of interest and get that loan paid off sooner. The last thing I want to talk about is taxes. This is a way to kind of maximize your after-tax return. This is a finance term. So basically, what I'm trying to get at is how to maximize your tax return to the IRS. So there's a couple of things that I just want to say. And the first one being qualified education expenses. your tuition, your room and board, books, fees, and anything related, whether that be clothing or a stethoscope or a goniometer or something like that, is all tax deductible. And if your parents are claiming you, it's also tax deductible for them. So make sure you really take advantage of this. And also transportation. You can also claim your transportation with this tax credit. And this is coming straight from irs.gov. And the last two, there's the American Opportunity Credit, and there's also Lifetime Learning Credit. Those you'll have to look up specifically, but if you type those in, usually the first hyperlink on Google will take you straight to the IRS website. You have to see if you really qualify for those. One of them is for non-traditional students like myself, where you had another career, now you're going back. And the other one is for, I believe most people would qualify for. But you can only claim these a certain number of years as well. And if you claim them in undergrad, more than likely you're not going to be able to claim them in your graduate studies. So that's kind of a bummer. But some of you may be eligible for those. So take a look at that. I appreciate your time and hope to see you on the next video.